a segment of the industry does well and everyone wants to chase deals in there. Your ability to judge passion is important. I focus quite a bit on a person's ability to convince people. Sometimes in India, it's very difficult to move forward without working in that gray zone. They may think we are capitalists and money-minded and returns all it matters. We can't even get our principal back most often. How do you remain objective even with that attachment? That's what I try to mentor my entrepreneurs also. Companies just don't fail. In our business, they get shut down. It's not the first entrance which always wins the race. Golf is interesting. Never heard even of golf when I grew up in India. And once you're in sales in the US, you're kind of forced to learn golf. You need to take customers out on great golf courses. We don't know golf. We can't do that. Golf is one thing. You always think you don't know what you're doing. Life is no different. Correct. Whether an entrepreneur or an investor or your husband or a father, you're imperfect.
Hello everyone, welcome to Golf and Beyond show. My name is Chetan and today in our leadership series we have with us Mr. Rajesh Raju, the Managing Director of Kalaari Capital. We all know him for the investments that he's done for startup in the Indian ecosystem. But let's hear his story today on this episode. So welcome Rajesh. So nice to have you on Golf and Beyond.
Glad to be here.
From engineering to sales to economics to Wall Street. Could you share a little bit of your experience when you started Kalaari and your investment journey with Kalaari Capital?
There are many firms now, although we are one of the pioneering firms in venture capital and tech investments. Few things we did well. One is don't really follow the herd, right? In tech and VC, most often a segment of the industry does well and everyone wants to chase deals in there, right? There's no point being a laggard, right? You might as well take a risk and fail, right? Rather than invest in a Me Too company.
Right.
That's what we believed, right? And that's what I still believe.
Right.
Some firms have done very well backing Me Too companies.
Okay.
But I don't look at that as a true venture capital. You want to invest in something groundbreaking, something different, something new that others have not thought about, and you're taking extreme amount of risk. That's fine. So we led a lot of the early cutting edge segments of tech, I should say. One is e-commerce.
Right.
We were the early investors in EdTech.
Right.
When EdTech was unheard of, then Byju's put EdTech on the map, but we did EdTech very early. We did a lot of the ancillary companies around e-commerce.
E-commerce. Right.
Once the wave of e-commerce was done, we said, what does e-commerce need to thrive? Whether it's supply chain, logistics, affiliate marketing. We invested in a lot of those companies.
Right.
We did well with those companies. We did gaming.
Right.
When gaming was really not an industry that anyone supported in India because gaming never had a revenue model.
Right.
And real money gaming was just not exactly experimented well in India.
Right.
There were some, rummy games and poker games there, but nobody was really playing enough to make them a large company.
True.
From Dream11 to Windsor to multiple other small gaming companies that we have supported. That was another wave of investments. Then we did a lot of after the e-commerce was done, then we did vertical e-commerce. So Snapdeals and Flipkarts and Myntras were more horizontal in nature.
Right.
And we did vertical like Bluestones and Urban Ladder and Zivame and all the vertical e-commerce.
Right.
So we had a theme for every fund that we raised.
Okay.
Every 3-4 years we end up raising a fund. Every fund we raised, every fund has a different theme. Because markets move dramatically in tech.
Right.
So from fund to fund, there's no continuity in any theme.
Okay.
We always pick new themes, whether it's fintech, edtech, health tech, e-commerce, supply chain logistics, SaaS, B2B.
Right.
We had a different theme for different funds. So you'll have 2-3 themes for each fund, basically. Right. And you go after them and take chances and you just hope that some of these companies work. But the core theme, which never changes, now people are realizing it. One of the early beliefs or thesis we had was, don't back a market, don't back a tech team, don't back a company, you back an entrepreneur. So because all those things are variables that change dramatically. Markets change, tech changes, everything changes around you. Early stage, it's very, very fluid, right? But one thing that you can't fail with, or the one thing that has to work for you is entrepreneur. We continue to make mistakes, by the way, picking the right entrepreneur. But we focused early on in picking the right entrepreneur. So even if you have a 5%, 10% better chance to win over other firms, we thought that incremental alpha is going to come from entrepreneur, not from the tech that we're backing. So we spent a lot of time on people.
So what's the lens that you typically use for all the audience watching, right? So how do you decide on an entrepreneur who's starting his journey?
Again, within the firm also, different people judge entrepreneurs differently. The first thing that you want to know in an entrepreneur is the passion, right? So how do you judge passion? The way they talk, the way they do things, the way they follow up with you, the attention to detail that they've gone through in building a product or even a simple PowerPoint. Are they passionate about the passion? Comes out in many ways, right? So your ability to judge passion is important. And again, like I said, different VCs look at personality traits differently. Because we're investing in tech segment, I always believe that entrepreneur understanding of tech is important, but he doesn't have to be a tech genius. At least that's what I feel. I always believe that the most important trait the entrepreneur should have is salesmanship. So again, salesmanship has different characteristics, and I'm a prime example of you don't have to be an extrovert, you don't have to be a rah-rah guy. Can you convince the other person that they should partner with you, they should follow you, they should support you, right? So interesting how many areas an entrepreneur has to show his salesmanship. Building a team is the most important thing and the most difficult thing for entrepreneurs. So for that, you're selling, by the way. You're selling your idea to few people who have many other opportunities and stable opportunities. You're asking them to take a risky opportunity with not enough pay. And most early employees, you can't pay them. You don't have any money to pay them, right? Then you're trying to convince your customers, of course, that you're trying to sell your product to. That is selling. That is a most obvious form of selling. Then you're trying to convince investors to back you. Right? Then you're trying to convince people to partner with you. So everywhere, there is no segmented sales skills or people with those skills. When you're a startup, you are it. You and your co-founder, 1 or 2 or 3 people are trying to do all these things. And mostly you're selling. People don't realize it. Every walk of early journey of a startup, you're constantly selling. And selling doesn't mean selling in a typical thing. You need to think about selling as trying to convince somebody to see what you're seeing. I focus quite a bit on a person's ability to convince people. And I think that's the most important skill. And most of my successful entrepreneurs that I've invested, I've been on the board, are not great communicators, not obvious salespeople, but something about them you trust and you want to support them, you want to partner with them, you want to follow them, right? That's a trait I try to look for.
So I feel this is so powerful for any entrepreneur watching this thing, because sales is going to be certainly a part of every walk of a business. Tell us a little bit more about the leadership and the culture that you have set at Kalaari, or how do you, because the whole series about leadership for us was what can we learn from you of the culture that you have set?
Always believe, and I share this with my entrepreneurs, that you should listen to everybody. listening is the most important thing. Never really disrespect your employees, your co-founders, anybody, right? Treat everybody with respect.
Right.
But running a company or building a company is not a democracy. It's only a democracy till the time you need to make decisions.
True.
Right? You don't try and build consensus and go with the majority of the consensus in decision making. I always believe that at the end of the day, you will be judged on the decisions you make. At the end of the day, buck stops with you.
Right.
So it's not a democracy in a company, and you need to absorb everything, listen to everybody, respect everybody's opinion. Encourage opinions.
Right.
No, don't discourage them.
What's that one value trait that you feel is non-negotiable in the culture setting that you have, like that you feel in any entrepreneur?
Most of the businesses and entrepreneurs feel that getting that edge, maybe going into those gray areas of trampling on ethics, laws, all those things will get them ahead.
Right.
I agree. Sometimes in India, it's very difficult to move forward without working in that gray zone.
Right.
But eventually, most people or most entrepreneurs realize that it's a harder climb following the rules and being ethical. But you will stay on top and don't trip and fall when you do at least 99% of the time follow ethical standards and legal standards and the right thing. Sometimes you have the leverage, you'll close the deal and you think you are getting a leg up on the thing and you're happy about it. All of us love deals, right? Who doesn't like a great deal?
True.
But you know that eventually that party will get you.
Correct.
Right.
So it's always important to make sure that
the other party is also
winning. Right.
Negotiating is all about making two parties. Can you get a win-win situation?
Win-win situation. But in this whole context of such amazing journey that you've had, have there been failures or challenges that you've faced where you felt you invested and things didn't go as per plan? Tell us a little bit about failure and your story.
Mostly we fail. Our business is all about failing.
Right.
The question is, are you, with experience, with hard work, some gut, some intuition, whatever it is, are you improving your success rate?
Right.
And our success rate, truly, to tell you the truth, would be 10-15%.
Okay.
And about 35-40% would be medium returns, meaning you're not being able to create great companies.
Right.
We'll get some money out.
Right.
But the real returns come from only 10-15%. Maybe 10%, not even 15%. Nearly 50% of companies, either they fail, shut down, or barely get any money out of those companies. That means we can't even get our principal back most often.
Okay.
So 0 to 1, that 1x of our principal, majority of companies are in that bracket.
Okay.
So we mostly fail. So if you ask me about failures, there are too many to list.
How do you handle that? Like,
most difficult thing, and it's very difficult for entrepreneurs also to understand about investors, is entrepreneurs feel the companies are their babies. Rightly so.
True.
Right? They created them and everything. But they also know that someone like us, early stage investors, we get onto the journey of building that company very early on.
Right.
And they may think we are capitalists and money minded and returns all it matters. But most of the investors get really attached to companies.
Right.
And entrepreneurs don't understand it. But as an investor, I can tell you, over a 20-year journey, I get attached to every company that I invest in.
Okay.
And the question is, how do you remain objective even with that attachment? That's what I try to mentor my entrepreneurs also. You need to look at your company objectively. Don't get emotional.
Right.
Doing anything, raising money, selling your company if you have to, or buying another company, doesn't really matter, right? Selling your shareholding, diluting, all these things, don't be emotional, be objective.
Right.
Easier said than done.
Right.
And it applies to me also. I get attached to companies when companies fail,
Mm-hmm.
it's like your kids.
Right.
And companies just don't fail. In our business, they get shut down,
True.
right? A company dying is like a child dying.
True.
You can imagine the emotional hurt you go through,
Mm-hmm.
and it happens again and again and again and again. Giving that advice, even though you're hurting,
Right.
and it's going to hurt the entrepreneur more,
Right.
all those are difficult conversations, difficult journeys, right?
Because as an investor, you've invested in so many companies, so you know the pain of closing a company.
you
but
go
you
through
have
the
to be
pain,
objective.
I'm not saying you get immune to it, but
Right.
you know that's the right thing to
Right
do.
way to go about. Right.
But it hurts every time. It
Right.
hurts and it lingers. You have sleepless nights.
I think this point of timing, you
Yeah.
know, I believe multiple times you've said it's important to be at the right place at the right time, right?
Yeah, yeah.
How important do you think that is? Because you've also been very averse of time is very important to you, right? So tell us a little bit about how important timing is for any entrepreneur and how do you decide what's the right timing?
Yeah. Unfortunately, you won't know
Right.
when is the right time to start something.
Mm-hmm.
Most often, you may be too early.
Mm-hmm.
It's not the first entrance which always wins the race.
Right.
You take most of the segments, whether you take from, from hardware players like IBM is not even a hardware player.
Right.
You take operating system players. IBM was the first one, not even in the game. Microsoft took over that. You take database systems. I think again, IBM's name keeps coming up. IBM was there. Then Oracle and Sybase, everybody took over.
Right.
You look at search engines. Google was not the first one.
True.
Yahoo and everybody was there, and they took over. Social media.
Right.
Facebook was not the first one.
Right.
They were like 10th player or
10th
something.
player, right.
But they were at the right time. You know, all these things. It's amazing. Semiconductors. You like chips and everything. True. Intel was there for so many years. Yes. They lost the AI, the whole mobility first and mobile phones and everything first, and then AI thing they lost to NVIDIA, etc., Qualcomm, all these guys. Taking chances in tech is important. So, of course, there are so many companies which were pioneers also, right? And there are a zillion examples of that. So you might as well be betting.
Right.
You know, your time, money and everything, whether it's entrepreneur or investor, on something new and interesting. So yeah, timing, whether tech or even investing markets, whether it's private markets like me, like what I do, or public markets. People think they have some great intuition about the companies. I believe in, efficient markets most of the time. So all these money managers that are out there, whether, mutual funds, hedge funds, whatever the markets are, I think
you can't really
beating the market over the long run is impossible. Sure. And so that means you can't time the market. Right. So you can't time anything, whether private or public markets.
But I actually know you because of golf. So let's kind of get a little bit idea, because when did golf start to you? Because golf is a sport where the timing is so important. So I know you're a great golfer. I've played with you. So tell us a little bit about when did golf journey start to you in your life?
Again, golf is interesting. Never heard even of golf when I grew up in India. My transition from engineering to sales, that story. And once you're in sales in the US, you're kind of forced to learn golf, because a lot of the deals happen on the golf course. You need to take customers out on great golf courses. We don't know golf. We can't do that. In the US, you can't incentivize people through money and everything.
True.
The best form of
hosting.
Hosting you can do is take them to a golf game, take them to a baseball game, or take them to a steak dinner. Right? Those were very limited choices.
Right.
Biggest thing is golf.
Right.
Because you get to spend quality time. 3-4 hours you can spend with a client. Unfortunately for golf, or fortunately, depends on the way you look at it. It's an addictive sport, game and a sport. And I've been a golf addict ever since, 30 years now.
But what's the life lessons that the game has taught? Like, how has it helped you in any way, golf?
I think my personality trait, it is more addictive for someone like me. Golf, actually, like entrepreneurship, is a game our sport of mostly imperfection, right?
True.
And especially for amateurs.
Right.
I mean, professionals are trying to get to the perfection, but they will tell you, when Tiger Woods, maybe the best golfer ever, will tell you that he is never happy with his game.
True.
He always thinks there are so many things wrong with his game. So you always think you can get better and better and better, right? And most of the things in our career, entrepreneurship, life, as a husband, as a father, you think you know what you're doing. But golf is one thing, you always think you don't know what you're doing.
True.
Right? Even the best of them will tell you.
They always want to learn.
They always think,
they're
they're just lacking something.
True.
Right? But other areas are no different, by the way.
Similar.
Life is no different.
Correct.
Whether an entrepreneur or an investor or your husband or a father, you're imperfect.
True.
Right?
So tell us a little bit about, is it luck? Is it skill? What is it about these hole-in-ones?
If you're a good golfer and you're hitting close to the hole all the time,
right,
and one of them will go in.
True.
Going in is complete luck. But at least if you're hitting it somewhere close, no different from investing, by the way.
Right.
You're doing the best you can in picking, like, if you have 100 companies that you've invested in, if you try really, really hard in giving those companies or picking those companies best chance of succeeding. Whether they succeed or not, it's not in your control. Give them the best chance through picking the right companies, helping them as much as you can. And hole-in-ones are no different. You give the best chance possible for the ball to go in.
True. Before we get to the final segment of the rapid fire questions, I would like to ask or know your point of view for all the youngsters in India, because India is actually the most youngest nation that we think we are. At least 53% of our population is in the young population. Anything that you would like to give as a message to them who's watching it?
I believe that people and young folks always have these 5-year, 10-year plans. Some people have 30-year plans of their life.
Right.
And they're also getting that kind of advice. Plan it out, plan your life out, 5 years at a time or 10 years at a time. But I've stopped doing that a long time ago because I know life is random. I believe that just like markets and investments and golf and everything, life is a random walk, and it's never a straight line.
Right.
And I believe that intense focus on what you're doing at that particular time is more important than focusing on the future. Right. Future, it is somewhat in your control, mostly not.
True.
Right. What opportunities you get, how the world is going to change, how your life is going to change, your personal life, your company, your situation, everything changes dramatically. Right. You don't even realize. But what's in your control is to do the best at that particular day, hour, minute.
Correct.
Be very, very good at it.
Right.
That month, that year, have short-term plans. Right. And just like golf, those 3-4 hours, that's all you can focus on.
Right.
Next day or next month, how your golf game is going to be is highly unpredictable.
Right. Absolutely. So that's the beautiful message. And now let's do a quick rapid fire where we have 7 questions, like a quick question. So we want to know, Rajesh, a little bit better with few things that we have. Shall we start? So a 30-foot putt or a 3x return on an investment?
I'll take the 3x returns.
So what's the favorite golf course in India?
Prestige Golf Share.
The golf course most loved international?
I played Pebble Beach, so love that course, but Poipu Beach in Hawaii is one of the most scenic, beautiful courses. Yeah.
Lovely. So most loved car that you love driving?
I love my Audi.
Audi, lovely. And the watch, any watch that you love the most?
I don't wear watches, but I love Patek Philippe.
Your favorite golfer, Indian and one international?
Tiger Woods is my favorite golfer of all time. Indian pros, I don't follow much. I love my local pro, Kumar.
Right, lovely. So one word for golf and beyond?
Focused.
Lovely. So Rajesh, thank you so much for being on the show. It means a lot for us and the entire audience watching it. There's so much that we've learned. And I know your valuable lessons will add a lot of value to people who are watching it. So thank you so much. I hope you've enjoyed our interaction and overall.
Absolutely. Great conversation. Like I said, like you said, actually, we know each other as golf friends. But I think it's a great way of relating golf and business and life experiences. So really enjoyed it. Good luck, and hopefully this was useful for your audience.
Thank you guys. Stay tuned and do subscribe. Thank you.
Thank you.